Welcome back. You're watching Closing Trades. And let's look at what's happening in the F&O market because that's going to close in next 3 minutes. The Nifty closing flat at just below the 24,400 mark, and we're seeing short positions getting built up there, and Nifty open interest up nearly 1.83% in Nifty Bank. Again, that saw some volatility today because the private sector banks is down nearly 0.4%, and again short positions seen there, a 1.7% jump in open interest position for Nifty Bank. If you look at the constituents of Nifty Bank, you'll see that a lot of private sector banks saw either long unwind or short build up coming in. So ICICI Bank saw a long unwind, HDFC Access, Kotak saw some short build up there. Except for IndusInd and Bandhan, where we saw some short covering, it was pretty much an unwind of position of long or adding of fresh shorts coming in. Look at what's happening in the call and put writing there. We had a good amount of call writing coming at 24,800 levels, so that's inching up to become a good resistance going forward. We had put writers active in 24,300 and 400 levels, and if you look at the distribution, at the 24,400 levels, we had a good amount of open interest positions with respect to call writing. So that's also holding off as a resistance for the market at this point. But look at the gainers, Nifty gainers, F&O gainers. Astral was up nearly 9.2%, short covering seen there. Solar Industries, numbers came in towards the end of market. We saw long build-up coming in there, 8.5% jump. Concor saw some long build-up, 4.5% jump in futures. In the losers pack, you had Nalco, Force Motors, and Page Industries all seeing some short build up down nearly over 4% in today's trade. Open interest gainers include stocks like Page Industries, 16.4% jump in open interest for Page. Geofin saw some short build up, open interest up nearly 13%, and Solar Industries seeing a long build up, most of them that coming in the last 40 minutes of trade. So open interest up nearly 9% there. In the losers pack, you had LIC. There's a long unwind happening. The stock giving good returns to some of the retail investors who participated in the OFS. Dixon Tech is seeing a short covering today, and Manappuram is seeing a long unwind in today's trade. So that's what is happening in the F&O market. And as we speak, the futures is closing at 24,466 at a premium of nearly 70 points to the spot, and we saw earlier the spot closing almost flat after some kind of movement in the private sector banks, which was basically an adjustment for the Sensex expiry that we saw today. So Kunal, your closing trades of trade for tomorrow, let me put it this way.
Yeah, I think we are at a point where the Nifty is not trying to show what the overall market is showing right now, because there's been a good recovery across so many sectors. Look at the Nifty Realty, Nifty IT Index, Defense, Auto, PSU banks, etc. I think except for those 3-4 major heavyweight large cap names, like for example today I was looking at the contribution plate, almost like a 50-60 point cut was seen to 3 major stocks. I think Reliance Industries, ICICI Bank were amongst the prominent names over there. So this is going to weigh the index over the near term, but I would still believe that the market construct is still extremely on the bullish side. Maybe I think from a trading perspective, we have hit back towards a point where the risk reward is attractive for an index trader to try and go for a contra buy at 24,300 mark.
Kunal, sectorally, do you see any trend building out? I mean, in the last 2 days itself, you've seen one up day, one down day for many sectors, be it PSU banks or metals.
See, largely this will happen, Aisha, because till the time the index doesn't see a follow-through up move, it's going to be difficult for stocks and sectors to find a very consistent, constant breakout moves for themselves. Because we are talking of large cap names, mid cap stocks could be a different basket altogether. But from a large cap perspective, the market requires positive push from the overall index. But largely I think we have to look at this as a pattern overall. If the stocks in a scope of say 1 week, 10 days, 1 month, they stand to recover 5%, 10% odd, then even though it's met with a lot of jagged edges, I would still believe that the trend is quite positive for many of the sectors. And I think this is exactly the case for the likes of metal, realty, IT index, etc. You look at this over the scope of the last 3 weeks, 4 weeks, maybe a couple of months, and these sectors have done phenomenally well. So without the index push also, these stocks are trying to gradually and slowly come back into their own.
Okay, with that, let's wind it up on this edition of Closing Trades. Kunal, thanks for joining in as always. We'll see you tomorrow, and let's bring you our special segment, Commodity Central.
Hello and a warm welcome. You've joined us on Commodity Central right here on ET Now. I'm Ashesha Adwariu, and today on the show we are going to put the spotlight on inflation in food prices and the kind of impact it is having on your pockets. To discuss this in greater detail, we are now joined by Mr. Pushan Sharma, Director at CRISIL Intelligence, who is now joining us. Mr. Sharma, thank you for taking your time out and joining us here on ET Now. And I was just going through the report that you've shared. Vegetable or vegetarian food thali prices have risen by 4% YOY, and non-veg thali prices have risen by nearly 9% on a year-on-year basis. If you can first take us through what is leading to this kind of inflation, what are the factors at play, and most importantly, how do you expect the trend to shape up going forward in the months of August and September?
Thank you for having me on your show. So if you look at the food plate, it comprises of three types of commodities. The first being commodities where we have self-sufficiency and the shelf life is high. Commodities like rice, wheat, spices. Then we have the second category of commodities where we have self-sufficiency, but the shelf life of these commodities is quite low. The horticulture crops like onion, tomato, potato. And the third category is where we may not have self-sufficiency and our reliance on the global supply chain is high. Typically, commodities which belong to the second and third category are the ones which show maximum volatility. And that is what we have seen being, happening in the month of July, where we're seeing inch up in prices for horticulture crop like onion, as well as where we have global linkage in terms of vegetable oil and LPG. So onion prices have risen by about 20% year on year, and LPG prices are higher by about 10% and vegetable oil by about 11%. So these are the key reasons why we're seeing a spike in the vegetarian and non-vegetarian thali. Non-vegetarian thali, further, what has happened is there's been a shift in the month of Shravan. Last year it was in the month of July. This year it is in the month of August. So on that low base, we are seeing an uptick in prices of broiler by about 14%, which is what has caused a larger jump vegetarian food plate.
Okay, and I believe, Mr. Sharma, some of it is also because of West Asia crisis, especially vegetable oil and LPG prices, which have risen. How much of it was because of West Asia crisis, which is now expected to moderate in the coming months?
You're right. So the West Asia crisis is definitely causing an increase across commodities, but few commodities have a higher linkage to West Asia crisis, specifically vegetable oil as well as LPG. Now, if we talk about vegetable oil, here about 55 to 65% of what India consumes is imported, right? This segment also has a high linkage to crude oil prices. So a lot of the vegetable oil gets diverted in the form of biodiesel in countries like Indonesia and Malaysia for biodiesel production. And hence this segment tends to show a correlation with crude oil. So we saw that crude oil prices, which were around $65 per barrel pre-conflict, went above $100 and now is around $85 to $90. So that's one reason where we're seeing a spike in the vegetable oil prices. The second aspect is the packaging costs have also increased. And for some of these segments, the packaging cost could be to the tune of around 15%. So both of these put together is leading to an inch up in prices. One could say that about 50% of the rise in prices could be attributable to the West Asia crisis. But while that is the here and now, there are structural reasons too. If you look at specifically the vegetable oil segment, what we see is that a large chunk of our palm oil imports are from Indonesia and Malaysia. Now, Indonesia has been ramping up its biodiesel mandate. So a large chunk of what it produces as palm oil gets diverted to the biodiesel segment. Now, about 5 years back, about 15% of its production was getting diverted to biodiesel. Now that number is close to about 25%. So what is available for Indonesia to export is actually reducing because its palm oil production is not increasing at the pace at which it is diverting to the biodiesel segment. So while the here and now is definitely causing a spike, which is the West Asia crisis, but structurally with lower surplus being available from some of our key exporting partners, there too we're seeing that is also contributing to the inch up in prices structurally.
Okay, so largely 50% of the price increase is because of West Asia and several other factors which remain at play. But Mr. Sharma, another factor which weighs heavy on prices and inflation is also monsoon. And this time around, of course, it has been lower than what the long period average is. What kind of impact is monsoon and the kind of trajectory it follows over the next 2 months likely to have on prices in the month of August and September?
Right. So monsoon is, a very, very critical factor at play when it comes to India's agriculture. There are buffers that we've built over the years, which has reduced our proneness to the risk on account of monsoon. And the reason why I say that is about a decade back, our irrigation penetration was close to about 45, 47%. That has risen to about 59% as we speak. So there is some buffer, some cushion that is available. However, the amount of rainfall that flows during the months from June to September determines really how our Kharif season is likely to be, which contributes close to about 60-65% of the crop production. Now, if we look at how the season has spanned so far, what we've seen is that June was a very dry month. This is the beginning of the sowing season, and we received about 40% lower than normal rainfall in June. July showed some recovery, and August and September is what we need to now watch out for. And what is forecasted by IMD is that we could see a slightly drier spell during August and September. This is the flowering and the vegetative state of the Kharif season, and hence we believe that if the monsoon is lower, than the long period average significantly during the month of August and September, we could see an impact on yield, and that could have a bearing on the overall production. The second aspect is because June was pretty dry, sowing across most of the crops has been delayed. So that is also going to lead to a delay in the harvest and hence the arrival for the crops. So one is a delay that we will see in the Kharif season in terms of the harvest and arrival, and the second is that the yield could be lower. All of these could have a bearing on the prices of these commodities, which could then contribute to the food plate cost. Another aspect that I would like to add is that the spike in demand tends to happen in India with the festive season. This year, the festive season is delayed by about 2.5 weeks as compared to last year. We had Dussehra on 2nd October last year. We have it on 20th of October this year. So that's going to provide some relief, because had this season been exactly the same as last year and with the delay in arrival, our demand would peak earlier than the supply could be able to meet it. So that's how we're seeing the situation right now.
So monsoon and festivities, these are the two factors that will largely drive vegetable and fruit prices going forward. That's the word coming in. Mr. Sharma, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts on what's leading to the surge in Thali prices and what the outlook, most importantly, is going forward. Thank you for joining us today. And with that, it's a wrap on this edition of the show. Thanks so much for tuning in. More news and updates will continue on the other side. Stay tuned.